Welcome to your Mortgage Insider Update. It is October 27th. It is Fed week with very little data to come with. The only recent information was this consumer price index report. Was directed by President Trump to require this information to come out, even though the government is technically shut down. So there's a lot of misinformation as far as what's available for the Fed to make their decision. What we do know is private payrolls have been down. ADP posts their report at the beginning of this month for the month of September. Was very weak in the jobs report there. That's not the Bureau of Labor Statistics report that the Fed really relies on, but they did get consumer price index, which came in slightly better than expected, 0.1% better than expected. So nothing groundbreaking as far as inflation, still coming in just under 3 or 2.9%. But that's could be enough for the Fed to just continue forward with their this next rate cut, which is expected pretty highly for this rate cut to take place here at the end of October. And then the next question mark is going to be December. December will be the next of their quarterly updates where they do the dot plots and they give a lot more information at that December meeting. So the swirl of what's going to happen next in December will largely be probably still in a government shutdown. So if that is the case, will they cut again in December? We're going to have to wait and see. Right now, there's like a 98% chance of a rate cut on Wednesday. So we'll keep an eye on that and give you an update next week. Let's take a look and see how the markets are doing this morning. So pretty quiet start to the week. Mortgage-backed securities sitting at zero change. It's been slightly higher this morning, but a 10-year Treasury up a little bit, 4.08. 4% seems to be this line in the sand that the rates are hovering around when it comes to the 10-year Treasury. So let's take a deeper look at that. We breached just above that on Friday after remaining the beginning part of last week, breaching below and actually acted as kind of a ceiling for a better part of the week last week. We are getting positive news on the potentially a China trade deal as the president actually travels in Asia and is making lots of headlines and trade deals out there. So the stock market has been really reacting well. Typically, as the stock market reacts well, the bond market can have a pullback, and that's money pulling out of bonds potentially and into stocks. So we did see this rise at the end of last week as those trade deals started to become more pronounced. I think the worry about trade and worry about, of course, inflation and jobs numbers had a lot of that worry brought us down to this lower levels that we saw at the end of the week with the pushback a little bit higher. Nothing to really concern ourselves with. It's probably going to tread water till Wednesday. And then depending on the Fed chairman's tone, that could make the case for either further rate cuts, which could drive rates down, or if it's stuff left in the open, which likely Fed Chairman Powell will not commit to anything in December, that could actually give quite a run up where the 10-year Treasury specifically could make it quite a bit before hitting the 25-day average. So a pretty wide range and a lot of swings could take place as a result. So another week, another wait and see. We'll come back next week and give you the update. I'm sure you'll see some headlines, but keep an eye out for what the Fed chairman has to say about future rate cuts, because this rate cut is in the bag, so to speak. Have a great one.